Welcome to Illuminati Silver. We tell her the truth about silver. Today is Saturday, the 8th of January, 2022, and we're publishing our gold and silver weekly update for the week ending the 7th of January, which shows both gold and silver prices falling, which is disappointing for the first week of a new year. So let's take a look. Gold fell $33 last week, falling from $1,829 to $1,796, having hit a high of $1,832 and a low of $1,783, a fall for the week of 1.8%. In sterling terms, gold finished the week at £1,322. That's actually down £31. And in euros, it closed at €1,581. That's down €27. Silver fared worse. Silver actually fell 92 cents, falling from $23.32 to $22.40, having hit a high of $23.42 and a low of $21.97, a fall of 4%. In sterling terms, silver closed at £16.48. That's down 79 pence on the week. And in euros, it closed at 19.71 euros. That's down 0.79 euros, or just over 3/4 of a euro. The gold to silver ratio rose from 78.4 to 1 to 80.2 to 1. Bitcoin also fell. In fact, it fell $5,465, following the previous week's fall of $3,626, and currently stands at $41,659. A far cry from its $69,000 not that long ago. The Dow Jones, now looking at equities, closed on Friday at 36,231. That's down just 4 points on the day and down 107 points on the week. The S&P 500 closed at 4,677, down 19 points on the day and down 89 points on the week. And for a hat trick, the Nasdaq Composite closed at 14,935, down 144 points on the day, and down a more considerable 709 points on the week. Now looking at oils, they actually strengthened this week, although they were higher than what they closed at. Brent crude closed at $81.75, that's up $3.97, and WTI crude closed at $78.90, and that's up $3.69 on the week. Both were well over $1 higher than that at their peak. The dollar index stands at 95.71, and that's up 0.05 on the week, having spent, in fact, most of the week above the 96 level. Now, we concluded last week's video with the following forecast. Quote, we see gold trading between 1800 and 1850, with 1775 to 1875 as outliers, and silver trading between 2275 and 2375, with 2250 to 2425 as outliers. Now, gold traded within our normal range until Thursday, at which point it fell below $1,800, thereby moving into the bottom of our outlier range and closing just below the important $1,800 psychological level. Silver also traded within our normal trading range until Thursday, and then fell back further, and even below the low of our outlier range, and closed some 10 cents below it. Now, normally we would have given a larger spread for our outlier range. In fact, it was quite tight, the one we quoted last week. The reason we didn't do that was that we were expecting silver to initially rise and then potentially fall back as the week progressed. But frankly, apart from a very, very quick initial blip, it was in steady decline from the start and closed below that important psychological level in the end of 2250. Now, traditionally at the start of a year, we would expect to see a little bullish sentiment in precious metals, but this frankly was sadly lacking. And it very much appears that hard economic data, leading to the prospect of the bond tapering program continuing, but adding to that the FOMC minutes which were released on Wednesday, suggesting that many Fed governors were in favour of the Fed, as well as ending the extra bond buying in March and allowing 3 rate rises in 2022, were also in favour of the Fed cutting back its existing $8 trillion balance sheet. And this certainly spooked markets, strengthened the dollar at the time, and put gold and silver into a slight but clear nosedive. The economic data during the week gave little hope for a reversal of these views, as most of it appeared either as per expectations or stronger than expectations, with perhaps the exception of the non-farm payrolls, which actually fell below the 422,000 new jobs expected and came in at 199,000 for December. This enabled gold and silver markets to recover a little, but nowhere near enough to cover previous losses. Part of the reason is that the unemployment rate actually reduced from an expected 4.1% to 3.9%, thereby allowing the Fed and FOMC the argument that they can cut further back on monetary stimulus as the overall jobless rate was reducing according to plan. Hourly average earnings rising 0.6%, whilst good for the workers involved, is disappointing to economists, as it suggests further potential upward pressure on inflation in the months to come. Now, this coming week's economic data will also prove, in our view, quite instrumental, as there are some important figures being announced, so let's go through it. On Monday, we have wholesale inventories for November, Tuesday, the NFIB Small Business Index for December, and now becoming more important, Wednesday, Consumer Price Index, Core CPI, and federal budgets, all for December. Then on Thursday, the weekly jobless claims and our Producer Price Index for December. And then a lot more data Friday, retail sales, note this one in particular, plus import prices and industrial production, all for December. And just to add a bit of gravy, the UMH Consumer Sentiment Index for January. So from Wednesday onwards, we can potentially see some impact if these figures vary wide of the mark, or frankly even meet expectations. There appears at the moment amongst traders that 2022 and 2023 are going to move into a hawkish monetary policy position. Technically, gold has a number of minor support levels between 1785 and 1770, with a major support level at 1750. Resistance certainly rests at 1800 level, and is more pronounced at 1850 and ultimately at 1833. Silver itself has broken below a key support level at 2250, but we still have further, at least psychological levels at 22 and 2150 underneath. Should 2150 break, then there's little to prevent silver from falling to $20. Resistance now stands initially at 2250, and perhaps more technically at the 10-day moving average at 2284. The fast stochastic indicator suggests that silver is oversold, whereas the MACD suggests a sell signal. So the technicals are clear as mud. With this in mind, we expect to see some oscillation this week, especially more so with silver. We therefore predict that we can foresee gold trading between 1750 and 1850 and be reasonably comfortable within those levels, with 1725 and 1875 as outliers. Silver can move in either direction because strong economic data, whilst providing a headwind to gold and silver prices, also can provide a degree of support for silver in terms of its industrial demand. And so we see silver trading between 2175 and 2325, with 2125 and 2375 as outliers. We think there could be quite some variation this week. What do you think? Do share your thoughts. We'd be interested to hear them. Meanwhile, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And we'll be producing a special video tomorrow, so please don't forget to press that bell sign. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.